So welcome everybody to How Much I Can Afford. This is part of the Homeownership SF Education Opportunity Programs. Homeowners SF is a citywide collaboration of experienced nonprofit housing counselors that serve as a centralized hub for local affordable housing. And they connect renters, home buyers, and homeowners with education, counseling, and other resources. My name's Charles. I work for Balance. I am a housing counselor. I have been a housing counselor for over 14 years now, working with Balance, formerly known as Consumer Credit Counseling Services San Francisco. I work in default counseling, people that have fallen behind on their mortgage because they didn't know how much they could truly afford. I also work in pre-purchase counseling, post-purchase counseling, and also rental counseling for us. I will let Danielle introduce herself right now.
Oh, good evening, everybody. My name is Danielle Kenny. I am a regional sales manager with Union Bank for Northern California. And so I'm very happy to be here today joining you to talk a little bit about the loan process and understanding some of the terms, and then obviously address any questions. I'm not going to say how long I've been in this business, but just because that ages you, but I do have 2 adult children that have seen me through mortgage for a while. So looking forward to our conversation tonight.
Okay, thank you, Danielle. Next slide, please. As I said, Balance is part of the Homeowners SF member agency. It's a coalition of 5 San Francisco-based housing counseling agency, Balance being one of them. The other 4 consist of Asian Inc., Mission Economic Development Agency, or META, the SF LGBTQ, and SFHDC. I know SF LGBTQ have added things there. Some I know, some I don't. But we're all here to help you, and a lot of our counseling, I can't speak for the other agencies, but a lot of our counseling is free through our agency because we do get grants and other things from other lenders, partners, and developers. Not developers, but other means of getting grants in order to provide that free service to you. Go to the next slide, please. Once again, my name's Charles. I am a certified HUD-approved housing counselor at Balance. Once again, our core services do include homeownership counseling, which I do a lot of the presentations for. We also offer rental counseling, debt and budget counseling, which is kind of along the lines of how much I can afford, along with the credit report reviews that we offer too. With the credit report review is very important to do, especially if you're planning to purchase a home or even looking for a rental apartment. And we also do student loan counseling. Next slide, please. So one of the things that lenders are looking for when they're trying to approve you for affordable loan amounts is they're looking at the 4 C's of credit or the 4 C's of lending, depending on where you fall, if you're a lender or a borrower on this. And I'm going to just talk about each of these briefly. When they're talking about character, they're talking about your credit history. The lender wants to know the integrity that the borrower has to pay back their loans, and they will check the client's credit report to do this. So they're just seeing how well you're paying back everybody that you owe money to, or if it's a credit card, personal loan, or anything like that. They just want to make sure that, hey, anything that you have on your credit history, you're paying on time. Any negative information, collections, foreclosures, or bankruptcies, that's going to be a higher risk, and the ability to borrow or the ability to pay off a loan or the ability to pay back a house might be a little bit more difficult on that situation. The next thing is they want to make sure that you do have the capacity to pay back the loan. So the lender wants to know if you are going to be able to pay it back, such as do you have enough money to pay back your house payment? Do you have the capacity to pay back enough money for your credit bills, like credit cards, car loans, anything like that? They want to make sure that you are able to put that together as well. Then for a lot of programs, you're going to need some sort of down payment. Even with renting, you are going to be required to get something such as first and last month's rent and a security deposit in most cases. For purchasing a home, they're looking at your down payment. A lot of times when they're looking at down payments, they're going to be looking at a whole bunch of different types of down payments as well. Like how much can you bring to the table? I will discuss that in just a few moments as well. They're going to ask you how much you may have for closing costs. A lot of people, when I'm doing the pre-purchase workshops, everybody knows that there's going to be a down payment in a majority of the cases, but a lot of people forget there are going to be closing costs, and closing costs can add up for a lot of people. And if you don't have the closing costs ready to go, that can be a difficult process of trying to get that capital together. The other thing that they want you to have is they want you to have reserves set together. So reserves are usually 2 to 3 months of your rent payment or your housing payment. So if it's $1,000 and you have to have 3 months of reserves set aside, they're looking at $3,000 that you have left over even after you purchase the home. When you purchase home, so they want to make sure that even after you purchase, you still have funds available as well. And then your collateral. So when you do get a mortgage, you will have a mortgage loan. The loan will be physically tied to the house. So the house is the collateral. So anything that's physically tied to something is going to have the major impact on your credit for anything. So anytime you see that you have a car loan or a home loan, those you always want to stay current on no matter what, because if you don't stay current on those, that can definitely have a major impact on bringing your credit down. And we don't want your credit to go down. So these are the 4 C's of credit, or 4 C's of lending, however you want to look at it. But this is what your lender is looking for when they're looking to approve you for your loan. Where can I see my credit? Oh, next slide, sorry. So you want the credit score and history determines your interest rate and your down payment requirement. So they're gonna definitely show if your credit, higher the score, the better the interest rate. Also, more of a down payment, the better it is for you as well. So that does help. Most lenders use the 3 main credit bureaus, which are Experian, Equifax, and TransUnion. And mortgage lenders typically use what is known as the middle score. It is not an average score, because a lot of times when you look at your credit report, if you look at just those 3 on the same day, you'll notice that all 3 scores may be different. The reason they're different is not all creditors have to report to all credit bureaus. Some creditors only report to 1, some report to all 3, and there may be some creditors out there that don't even report at all. That's why you have different credit scores. In addition, when you are looking at your credit score, that's going to be your credit score for the day. It can change on a daily basis as well. Now, depending on some loan products, they may have additional terms or requirements that can trigger your credit score and trigger history. So what you may want to do is you can go to the next slide. You may want to look at ongoing credit classes, look at counseling appointments, obtain your own credit reports. We always mention annualcreditreport.com that you can go to, and you can look at your own credit report for free there. Some credit cards and banks include credit scores that are tracking on your statement as well. So you can do that. The 3 major credit bureaus that you can look at, once again, Experian, TransUnion, and Equifax, you can go to their websites or you can call them at those numbers there. If you feel that your credit's in good standing and you feel good about moving forward with either renting or purchasing, go ahead and move forward. You can always contact a housing counselor for individual credit counseling, or even talk with a counselor about credit report review. which if your credit scores are not that great, I highly recommend doing that before you move forward with any major purchase, just to see what you can do in order to help improve that. Just give me for just one moment. Now, one of the things that we want you to do is we want you to create a budget. In my workshops, I do talk about the acronym SMART. It's called specific, measurable, attainable, realistic, and time sensitive. So when you're looking at the SMART program, when you're being specific, you're thinking about the what questions. What do I need? What money do I have? What purchase price do I qualify for? What's my credit? What score will the lender accept? Those are the things that you want to ask for the specific. The measurement is how much do I still need? How much do I have? How will I know when I'm ready to purchase? Take a look at that, and you can also see, okay, I'm set to go there. The next thing that you want to be is it attainable? So if you construct a budget and do a budget, that will let you know if it's truly attainable or not. Right now, if you haven't constructed a budget, if you don't know your budget or how much you need for the home, that's going to be an issue as well. The last, realistic, you want to be real about your purchase power. So I've had people in the past that I came from the mortgage industry as well. People in the past that got approved for a big loan, but when they did their expenses and their take-home income, they really couldn't afford that big loan amount. So a budget will let you know exactly what you can afford. And then time sensitive. Put a time frame on it. If you want to try and get your down payment ready to go within 6 months, put down 6 months and say, I need this amount of money for my down payment. Or if you want to go further out, 12 months. Make it time sensitive. So specific, measurable, attainable, realistic, and time sensitive. And then once you create that budget, one thing you can do is you can practice living on your future payments. So if you have a budget, you're going to have what you're currently paying. But if you feel you can pay that amount ahead of time, practice for about 3 months and see if you can save the rest of the money for the down payment. If you can't make the ends meet, then you at least you know before you're committed to a 30-year loan. And your lender or housing counselor can help you calculate the purchase price you can afford. So I will give it over to Danielle now. And go ahead, Danielle.
And I'm on. So thank you, Charles. So I'm going to talk to you guys a little bit about some of the intricacies of going through the loan process and what some of the jargon means as we hear things thrown out and we want to know exactly what we're talking about, right? So, I think there we go. Perfect. So one thing that Charles mentioned earlier was the cost of home ownership, right? So we have the upfront costs, which we know is the down payment, closing costs, which are going to include things like title insurance, transfer taxes, recording fees, fax fees, all sorts of things. And that amount could range anywhere between 3 and 6% of your purchase price. So if you're looking at a $200,000 house, that could be anywhere from $6,000 to $12,000. Now, obviously $200,000 in California is not realistic, but just keep in mind the percentage is relevant to that. Escrow, which again, escrow will be talking about your property insurance, or your property taxes, your homeowner's insurance, those things that are required by the lender to be paid upfront, depending on what time of year you're purchasing the home for property taxes. Reserves. So this is going to be if certain loan programs require you to have so many months of reserves in the bank, we're going to have to verify that after we take the down payment, the closing costs, and the escrow out, that you still have this nominal amount left for reserves in case something were to happen. And then I think the one thing we all forget about is moving costs. You know, it's great if you got a lot of friends with trucks, but in reality, there are going to be costs going into a new home, right? If you're going to be buying new furniture or appliances, just storage, anything to that effect. So those are a lot of the upfront costs to consider. When it goes on ongoing, obviously your mortgage payment, the taxes and insurance that I mentioned before, HOA fees, which is homeowners association fees. So this is going to be an amount that's charged typically with a condo complex or maybe a planned urban development where you have some sort of common area, and they will cover that. So they provide the gardening, they provide the outside maintenance and so forth. And so there's a monthly fee that is tied to that. And obviously utilities, maintenance, and repairs. So to that point where your qualification may take you to a larger loan amount than you thought possible, it's really important to focus on how much you're going to feel comfortable with each month with sending out those costs that are going to be continuing and ongoing. So just keep that in mind as you're looking at these products. Next slide, please. Okay, so here's another fun acronym for lending, PITI. So what this stands for is principal, interest, taxes, and insurance. Okay, so that is everything that can be wrapped into the payment to keep you in that house. And so typically we're looking at trying not to look at more than 33% of your gross monthly income. Okay, so if your income, you know, is $10,000 a month, you do not want more than, you know, $3,300 going to your housing expense, which again would include your mortgage payment, property taxes, and the homeowner's insurance. Okay, next slide. Oh, there we go. Property taxes. So this is a fun one, especially in the state of California. So you have your assessed value, which is when you go to buy a home, the purchase price is $500,000. So that's the value, right? And you times that by the tax rate, which is around 1% for the state. And then each county and city will also have additional assessments, liens, et cetera, for their infrastructure that will be tacked onto that tax rate. So what lenders use is just kind of a roundabout number, is we use 1.25%. So if you have a $500,000 house and you take times 1.25%, divide that by 12, you're looking at about $520 a month for your property taxes. So, and property taxes the bill is cut into two. So the first payment is due in December and the second one in end of March, I think it is. Don't quote me on that. I have an impound account, which we'll talk about next too. So next slide. Okay, impound account. So as I mentioned before, you have an option when you're getting a loan to set up what's known as an impound account. And what this does is it adds the amount of property taxes and or insurance, right? Your homeowner's insurance to your payment, and it keeps it in an account, an escrow account or an impound account. And then when those property taxes are due, the bank pays that on your behalf. So you don't have to worry about saving up for your property taxes because it's almost like a forced savings account. The same thing with your hazard insurance premium. So your insurance premium is going to be due once per year, and the bank will go ahead and take care of making that payment for you because you've been paying into this account for the whole month. If you are in a loan product that requires mortgage insurance, meaning your loan to value is over 80%, this is something as well that would be inclusive in the impound account. Homeowners association dues are not typically, because they can change a lot more frequently than your taxes, right? You get a tax bill once a year, you get an insurance premium once a year. And so therefore it's just not something that's typically included within an impound account. Next slide, please. Loan options. So this just mentions a couple of them, but there are definitely lots of other options that are out there as well. So if you are at the expo on Saturday, I highly encourage you to talk to the lenders. I will have two of my lenders there to help support and answer any questions. you typically will hear of these two predominantly because they are the most quote unquote popular. So a conventional loan is going to be one that's a 30-year fixed rate, a 15-year or 20-year. You're putting 20% down payment. In some instances, you can put down as little as 5% or even 3%, assuming you can be approved with private mortgage and you fit into some parameters of that loan program. Government insured is going to be our FHA, our VA, and CalHFA. So these are backed by our government. FHA allows for 3.5% down payment, VA being a veterans loan, 0 down, 0 closing costs, and then CalHFA with the 3.5. Discussing the different options for you with a loan program is, again, one I would highly recommend that you talk to a lender directly to see which is going to be a better option for you, as there are different costs and restrictions with each product as mentioned. So next one, please. Okay, pre-qualification. So again, when you're meeting with your lender and you're talking about how much the bank will loan you, what your monthly payments are, how much of a down payment will be required, and your maximum purchase price. So things change, right? Have we not seen interest rates bouncing all over the place in the last few months? Prices change. So it's an estimate when you're looking at something called a pre-qualification. Typically at this point, the lender has maybe taken a peek at your credit report, looked at a pay stub, kind of said, yeah, you can kind of fit into this realm. But again, until the loan is reviewed by an underwriter and what we call fully underwritten, it's just a pre-qualification. And so it gives you kind of an idea of what you can afford. And then again, also looking at that payment, is that the payment that you want to commit to, as Charles said, potentially for the next 30 years. So next slide, please. So ratios, you will hear this quite a bit as far as how lenders are measuring what you can afford. So there are primarily two ratios, housing ratio, which is what they refer to as your front end, right? Which is the maximum percentage of gross monthly income that can be used for your housing costs. So as I mentioned previously, they like to look at 33%. That's not a hard and fast, so don't feel like that's the stuck number, but that's typically like a good safe spot, if you will, if you're just trying to measure as far as what you're going to allocate to your housing expense per month. And again, it's based off of your gross monthly income. So prior to your taxes being withheld, prior to insurance being withheld, prior to your 401k, it's that gross number. The second ratio that we review is the debt to income ratio, or what's referred to is the back end. So this is any of your revolving debt, your car payments, your installment debt, if you've got student loans, if you've got, lines of credit, all of that debt, including your housing, is what's called the back end. So for the most part, you're looking at typically, I would say 45% to 50% is going to be your maximum back end ratio, right? So if your front end is at 33 or 40, the max you're probably going to be able to get through for approval is going to be between 45 and 50. So those are the ratios that we look at. And again, it's all based off of the percentage of your gross monthly income. Okay, so next slide, please. So maybe through all this, you've decided you're ready. So the next step obviously would be going through the pre-approval process. As Charles mentioned, your credit score, is it where it needs to be? Most lenders and loan programs have a minimum credit score requirement. Some will go as low as 580. For the most part with banks or larger banks or institutions, you're looking at a 620. But again, it's going to be depending upon which route you're going and what program and so forth. Do you have enough saved for the down payment? And in the down payment, do you also take into consideration that you will need potentially 3 to 6% of whatever that purchase price for the closing costs? So you may have 10 or 20% down payment saved, but you're really going to need, anywhere from 13 to 24% saved to include the closing costs. Do you have a 2-year history of consistent income in the same industry? And so the big caveat on this one is what I will say is that if you are a W-2 employee, you've been a W-2 employee, you've done it for the 2 years, we have a way of showing your job history and the consistent income. If you are self-employed and you were a W-2 employee up until a year ago, and then you decided to go out on your own, you're still going to need 2 years of history of that self-employed income. So that is one thing to consider, is that if you've gone out on your own and you're now self-employed, we need a full 2-year history to view how you've done out on your own as a self-employed. Have you paid off, reduced your monthly debt? So one thing that can definitely affect your credit score is the percentage of revolving debt that's used. So if you have $10,000 that's available to you in revolving debt and you've used $9,999 of it, it can affect what you're going to be able to qualify, because it's going to affect your credit score. So getting that percentage of revolving debt usage under 30% or 25% is going to be huge for you guys. Are you saving all your documents and records? And one thing you'll going through this process is you will feel like you are handing over your entire history when it comes to paperwork and so forth. So having 2 years of W-2s or 1099s, having 2 years of your personal tax returns, having 2 years of your business returns if you are self-employed and it's a partnership or a corporation, 2 months of bank statements, 30 days of pay stubs, if you're getting an estimate for your homeowner's insurance, if you've paid rent for the last 12 months and we need to validate that you've paid your rent on time, do you have 12 months of canceled checks? So your lender, again, will go through what all documents need, but just making sure that you've kept those and keep them in a safe place so that you're ready to be able to produce them when you need to go through the process. Next slide, please. Okay, so a pre-approval letter, as I mentioned, the difference between a pre-approval and a pre-qualification is going to be that your pre-approval has been viewed by an underwriter, which means they have vetted your income, they have looked at your assets, they have taken a look at your credit history, and they have approved you based off of those items. And now all we need is a property, right? So once then you go out and identify a property, your real estate agent is able to provide a fully pre-approved loan as part of the offer package. It makes it a stronger package to the seller. And then that makes the process just so much easier, because then it's about just doing an appraisal, if there's inspections, that type of thing. And you really do have a much smoother process than getting into contract and then finding out that the overtime income you thought you could use, you can't use. And so now you can't qualify for that dollar amount. So I always encourage any borrowers that are, especially first time, that are going out to do this, to work and get a full pre-approval with your lender, because then it takes any of that angst out of going through that process. And, you know, buying a home is the best and worst experience because there's just so much emotion tied to it. So if you can kind of calm that storm before you get out in the market, it's always a great idea. So, okay, next slide. Okay. So again, I think we talked about a little bit about some of this information that's on this slide. Living in your new budget, you may qualify for $1 million loan, but do you really want to pay that $1 million loan payment every month? Or do you have a set dollar amount? When I was out in the field and originating loans, and I'd sit down with a client and I'd say, okay, tell me what you're comfortable with to pay each month for your house. So if you're paying $2,000 for rent and you're okay upping that to $2,500 to buy a home, then let's work into that, and we'll look at, the monthly principal and interest payment. We'll look at the insurance. We'll look at the taxes, because all those are built into that monthly housing expense. And California property taxes tend to increase 2% every year. So that's one thing to keep in mind, is that amount where your property taxes may be, $5,000 for the first year, the next year it can go up 2% of that $5,000. So And the same thing with your homeowner's insurance or the HOA fees. Depending on what's going on, that can change as well. Sometimes there's discounts that come in, other times there's special assessments that require an increase in either of those fees per month. So, okay, so that's the nitty gritty from the lending piece, and I'm going to hand it back to Charles now. Thank you. Charles, you might be on mute.
Yeah, there we go.
There you are.
Sorry about
There
that.
you are.
I saw that. So for those of you that are thinking about purchasing, especially in San Francisco, one of the first things that you will have to do, you can go to homeownerssf.org and you can register for a 2-hour orientation. The 2-hour orientation will talk about specific programs where you might be able to come in as little as 3% for down payment for the program. But in order to qualify for some of these programs, you have to take the orientation first. You can take it with any of the 5 nonprofits that were originally listed. Once again, Asian Inc., Balance, Meta, SFLGBTQ, and SFHDC. So you can take it with any one of us. They are free, and they're pretty much right now, I think they're offered weekly. I don't know for sure, but I know at least definitely once a month with our agency. And then once you have completed the 2-hour orientation, then you can take a workshop and you can register in the same place where you registered for the orientation. I'm going to speak for Balance. I'm not going to speak for the other agencies, but for Balance, we do offer 2 options. The first option is a free webinar 2 back-to-back Saturdays that you can take, and they are 3-hour courses. You do have to take part 1 and part 2 to get the completion. And then if you're in a hurry to get something done, you could also, the part 1 and part 2 workshops are free. They're free webinars. But if you are in a hurry and you want to take a self-paced course, you can take a self-paced course, but the self-paced course is going to be a fee. For Balance, the fee is going to be $75. Now, whoever you take the workshop with, you do have to stay with that agency. So if you take the workshop, if you take the orientation with Balance, but the workshop with the LGBTQ, then you have to stay with LGBTQ for the one-on-one counseling. And it is a 2-hour one-on-one counseling session. Balance does not guarantee any immediate counseling sessions, but we won't book anybody until they've completed all 8 hours first. And then we'll book you for the appointments with doing that. So once again, you can find that complete list of San Francisco homebuyer workshops and city assistance programs at homeownersf.com. Or is that, I believe it's .org. Is it .org or .com? I thought it was .org. I'll double check on that. For more information,
it's definitely .org. Sorry about that,
Yeah.
everybody. Homeownershipsf.org.
I see it's
Thanks.
correct in the email, but it's not correct in the website. Okay. And you can even call them at that number there, 415-202-5464. Next slide, please. So this weekend on Saturday, October 1st from 11 to 2, we will be having the Housing Expo. We haven't had that in person for over 2 years due to COVID. It is a place where you can sit down and, like Danielle said, she'll have some representatives representing Union Bank there. I will be there as well. We will provide information and services for renters, home buyers, and current homeowners. There's individual assistance to address financial hardships as well. So it will be at the Loyola Harvard Early Education School at 1520 Oakdale Avenue. Saturday, October 1st from 11 a.m. to 2 p.m. So I think what I will do is we will open it up to questions right now to anybody that may have any questions for either one of us. So does anybody have any questions? I believe there will be parking available on Saturday.
This is David Williams from Homeownership San Francisco. There will be parking. It's in the Bayview, next to the Bayview Opera House. So there will be parking in the neighborhood, but we do highly encourage folks to take transit to get there. The T line runs right down 3rd Street. But there is parking in the neighborhood, but there's no designated parking lot for attendees.
Thank you, David.
I have a question. So if you have back IRS tax debt, how does that impact your ability to purchase?
So on tax debt, if you are in a payment plan with the IRS, so you're making a monthly payment, that can be viewed as acceptable, showing that you've consistently done that. If there are liens or so forth that's either on a property or on your credit, it may warrant a different discussion. But again, if you have gotten into a payment plan with them, that can be sufficient. So
Okay, great. Thank you.
you're welcome.
May I ask a question?
Go ahead.
I'm an old lady, 85. I've been self-employed most of my life in teaching. It's a Christian teaching ministry in voice and music. At the same time, I've performed with San Francisco Opera, Santa Fe Opera, Oakland Symphony, etc. Because of COVID, I couldn't continue to teach because of the nature of singing and because there was no transit and I'd had to let go the house I was in. Is there any hope, I think I mean that, for finding a place to live? I've been staying with my studio people for a couple of years now while looking for a place, but my income is down because of I couldn't teach and the rents all go up. Is there really, you have said you work with renters also, and do you have any suggestions for a starting place? Because I've not been able to find things at all.
Well, a couple things. Have you gone on to our DIA site with the mayor's office at sfmohcd.org?
10 years ago, I did go to them, or 8 years, something, yeah. And I had a bad experience in that it was suggested I claim mental difficulty in order to get some mental help temporarily, when I knew that in private teaching, the clientele changes. They're just normal things of attrition. And so with it, there was a hard spot, and I needed a little temporary help while I found a place because the landlord had died, so I had to find another place. And the lady in the financial thing suggested I do a budget for something that would be comfortable, because I was living on, well, what was not very comfortable, but I grew up in the end of the Depression, so I was used to that. So,
Okay.
yeah, I went with him, but it was not successful, and I was hoping I might find something that I can no longer assume I can quickly get more students, even if I find a place. I've had to stay now far outside in the Fresno area with friends, students.
But you're receiving a income for Social Security, I'm assuming?
I have Social Security. I have an annuity from my union,
Okay.
AGMA, and I have one student that I can work that way with, work in spite of the difficulties. Yeah.
Okay. So we can look at both, but the rent, it sounds like renting to begin with for me.
Yes, and something very
yeah.
small to begin with,
Yeah,
obviously.
yeah.
And
So I know with the mayor's office, things have changed in that 10-year period of time. And there are now, if you look on the Dahlia, they are below market rate homes. That if you do have to qualify, but if you do qualify, even if some people didn't even have an income, they do allow there's special senior housing as well for certain aspects. But then there's some places that if your income meets the eligibility requirements, you could qualify there. So I do recommend setting up a rental counseling. I see your name, Ann Garber. Is that correct?
Graber,
Graber. Okay. I'll try and set you up with, if you want, one of our housing counselors or me for the rental counseling.
I would appreciate that very
with
much.
you, and then we can go into more detail in regards to your situation.
And would this, should I be there Saturday to try to talk to you, or what?
If you want to talk with me on Saturday, if it's too far, you said you're out in Modesto, or where are you out in again?
Fresno.
That's a little bit
Clovis,
far, so you don't have to if you don't want to, but you're welcome to. But we also do phone counseling sessions, so you don't have to go anywhere with doing that.
Right.
So
I do way better in person.
okay,
I'm
we do
definitely
have some in person, but we would have to set you up ahead of time for that. So I will get the information from David after tonight's webinar to get more information from you for the rental counseling. And
right.
Well,
thank you.
Look at that. Okay.
So I may hope to hear from you then. Have I got
myself, or at least
right?
somebody? Yeah, myself, or at least
so
somebody else from my agency with doing that. And then thank you, Ann. I have another question. If I have attended a workshop a few years ago at Balance, do I have to take the workshop again? So just to remind those people that have taken workshops in the past, wherever you go, your workshops are good for 2 years. Once that 2 years is up, then you should be going again. Also, you should have a verification of homebuyer education, which you should be good for at least 1 full year. If it's about to expire, you want to renew it, but you only get 1 renewal. And then after that 1 renewal, you have to take the entire process all over again, starting with the orientation. So I would take a look to see when your verification of homebuyer education is good for. Now, I can't speak for any other agency. The workshop and education that we do primarily in San Francisco pertains to San Francisco. But if you do go outside of San Francisco, Balance is a nationwide intermediary. So we can give you a certificate for outside of San Francisco. However, it will be up to the city and county of the municipality where you go to decide whether they'll accept it, because we've had some counties had no problems with it. Other counties said, no, we're not going to accept it. We need to do our own. So it all depends on where you go outside of San Francisco. So I can only speak for Balance. I can't speak in regards to other agencies.
Hi, I have a question.
Sure. Go ahead.
Hi, my name is Maya Tumaken, and we have a letter for housing in San Francisco that we're gonna get a voucher, Section 8, and where can we find an apartment?
Okay. So Section 8 housing. So same place where I told Ann to find, you're looking for find apartment, you can go on to the mayor's office at sfmohcd.org and look. When you select, they're just going to say, you want to go to the Dahlia. The Dahlia stands for Database for Affordable Housing Listing Information Application. So it's just an acronym. It's but you would click on the Dahlia, and then you would put in your income, what you're receiving. And once you put in the income you're receiving, it will allow us to see what you might qualify for. Then you would look into the details. And once you look into the details, you can actually see if they do accept housing vouchers. Because a lot of the places now
Uh-huh.
on the Dahlia are accepting housing vouchers, but you got to see who is willing to accept them.
Oh,
Yeah.
and
Or you
can we do a counselor
okay.
for so that they can find us a housing?
Okay. So we will look for you. At the end of the day, we don't actually place people, but we see what would be affordable to you
Yes,
with
please.
doing that.
Uh-huh.
Okay. I wrote down your name, and once again, I'm going to talk to David and get any additional information from you.
Yeah, please.
Because
Thank
I know
you.
everybody registered with their
Yeah.
email when they
Okay.
go on there.
Okay, thank you.
Thank you, Maya. Okay, take a look at this question here. I think there was somebody above that.
Yeah, David, do you know where they can find a recording of the presentation after we're done tonight?
Yeah, so we'll be posting all these to our YouTube page, Homeownership SF YouTube page. And so they'll be able to find them there. And we'll be sending some follow-up emails with that information
Okay.
to everyone who's participated.
And I can answer Olga's question in regards to the 2-year history of consistent income. So it's kind of, I don't know, convoluted to say, if your husband is switching his industry, right? But he's still going to be a salaried W-2 employee. Maybe he's going from, I don't know, tech to something else, right? But the income type is the same, meaning it's just a straight salary. There's no overtime, there's no commissions, there's no bonuses, that type of thing. So all we can really compare is apples to apples when it comes to base salary to base salary. So if he's leaving an industry where now he's going into sales, and the majority of his pay structure will be based off of commission, that will affect what amount we're able to use, because he does not have a 2-year history of earning commission income. If he's going from, like I said, being in tech, salaried, and then he's decided now he's going to be a teacher where he's now salaried and there's no other added things going into it, then yes, we can consider that income, because it's not variable, meaning that there's not going to be inconsistencies when it comes to commission or bonus or overtime. So it's like pay, if that makes sense.
I just want to piggyback on that question. What about people that were affected by COVID? They were out of work for a long period of time and working at the same job again, but were out.
Yeah, so I mean, there are guidelines that were put into place as a result of COVID, and as a result of people maybe being off work for part of 2020 or all, 2021. And so we have ways to kind of piece together the income, if you will. So say the job shut down, right? So we have a lot of maybe restaurant servers that did not work for 6-7 months in 2020 because nobody was going out to eat. We can document, there was unemployment income that was received during that time. They're still with the same restaurant, and now we look at a recent picture of how they're doing, and is it consistent to what they were doing prior to COVID, right? And then we can take that into account. It's a little bit tougher for self-employed just because it's a bigger gamble and a risk when it comes to kind of documenting that they've been able to bounce back after COVID. It's a little easier if you were off work for a few months because COVID shut down, or even in cases where, people were let go because the business is shut down and then they were off a few months. We can definitely take that into consideration.
Thank you.
Mm-hmm.
Will there be people there on Saturday to help with credit repair. I don't like calling it credit repair because I'm thinking of credit repair companies, and I'm not a big fan of credit repair companies, but there should be people there that could help you, let you know how to improve your credit if you need to. Once again, we would probably set you up with a session with a credit counselor in order for you to do a credit review with doing that. So there'll be people there to ask. If there are people available, they'll let you know where the people will be when they are available to discuss your credit or do a counseling session.
I have a question.
I didn't hear what the question was, so if you can type it in the chat.
How realistic is it to look at home ownership?
Oh,
So cut out after you said how realistic is it to look at home ownership, and I'm assuming there might be like a secondary.
Yeah, the second part is what age does it become unrealistic, or is there an age?
There's no age. No,
Okay.
you want to be a first-time home buyer at 85, we're going to help you be a first-time home buyer at 85. So no.
Yeah, that's been at the back of my mind. Thank you.
Yes.
and to give you a little heads up, here in San Francisco, the definition of first-time homebuyer cannot have ownership of a residential property in the past 3 years. So if
Got
you
it.
owned the property 5 years ago, something happened, and you haven't owned a property since, you qualify as a first-time homebuyer.
Excellent. Thank you.
So, Olga, I wouldn't necessarily bring the documents with you on Saturday. I think meeting the lenders and kind of setting up a more, private conversation to kind of really dive deep into that would be probably the best option on Saturday. Just that way that you can have their full attention and they can give you your full attention and tell you exactly what would be needed and what documentation they would want to see prior to kind of talking to you a little bit about the lending amount or the eligibility. And if you would like, I can get you in contact with one of my loan officers before then. So if you want to have a conversation with them prior, we can definitely do that too.
Okay. Well, people in Emeryville. So Crystal, a couple programs, like I said, the workshop, if you're purchasing in San Francisco or outside of San Francisco, we are able to do that for you. One of the biggest programs that's still out there, they're still giving money until the funds run out, and they're talking about reopening it again. It's called the Neighborhood Lift Program, where they can give you up to $25,000 based off of your household's income for down payment assistance. So that's one. Once again, I know Danielle was talking to me about some different programs. Even the lenders may have their own specific programs that they can give you to help out with down payment assistance. I know Alameda even has below market rate homes out there that I'm aware of, and so does Lafayette, Concord, San Ramon, just to give you different areas where you can look for below market rate homes. But you do have to qualify for those, and you do have to qualify for the down payment assistance. If you're the other thing too, if you're a first responder, educator, sometimes there's additional down payment assistance for those as well.
Yeah, and there's still WISH funds available, which is through the San Francisco Federal Home Loan Bank, which Union Bank is a participant, and that is a 4-to-1 matching program, that is up to $22,000. And so, as Charles mentioned, I was talking to him prior to the call, there's ways to layer some of these programs, right? So I had a loan officer close a loan last month where there were 4 different programs that were attached to getting this individual into her home. So, you know, we had our loan, we had Wish funds, we had the Lyft program, and then we had Union Bank has a grant as well. So it's best just to chat with a lender who or one of the agencies that knows the different programs that are out there. And then most of these programs that are out there, they have approved lenders that have either gone through a training class and worked with them before, or they've been, you know, in correlation working together. So, but I can definitely, Crystal, too, connect you with a loan officer that can kind of guide you through some of those programs that are available.
And Olga, I love it when people don't think they're ready yet, but it is a good idea to know what you could actually afford. So that's where the housing counselor is really beneficial, because once you talk with the housing counselor, they'll let you know where you're at, what you can afford, and they'll even say, hey, look, yes, you're ready to go. You are ready to purchase. Or they'll tell you, no, you're right. We're going to have to wait about a year or 2 before you're ready to go. So after looking at your income, your assets, doing a soft pull on a credit, it will not harm your credit because it's a soft pull. Well, I know when you go with lenders for the pre-approval, that will be a hard inquiry and that will affect your credit score. But when you do it with a housing counselor, income, assets, debt, and we even do the budget together. And one of the things that I do when we're looking at can I afford it, when we do the budget, it's surprising what a lot of people don't think of. How many people that have children remember to put on their budget the child's allowance? People forget about those.
Or even better, the adult children that are still on your cell phone bill.
There you go. Yeah, so anything like that. So just a little something like that. And I think it would be a good idea for you to speak with the housing counselor, whether it be us or any one of those nonprofits I told you about. You're welcome to do. And just to let you know, if you are purchasing, I think it was you for Emeryville, if you are purchasing in Emeryville and you're just doing the workshop, you do not have to do the orientation. It's if you are considering, even if you are just considering San Francisco as one of the options, you do have to take that orientation. But if you're not considering San Francisco at all, then you do not have to take the orientation, but you still have to take a workshop. And the workshop is 6 hours long total. Any other questions?
Yeah, Crystal, David mentioned that they will be uploading the presentation to their YouTube page. So David, if you want to mention the YouTube page again so she can access it, that would be great.
Yeah, so probably next week we'll be uploading all these workshops to the Homeownership SF YouTube page, and we'll be reaching out to all the participants and letting them know where you can find it. Other than that, I think we're good to go. Thank you so much, Danielle and Charles, for a wonderful presentation.
Thank you. And thank you, everybody. And Ann and Maya, I will be reaching out to you as well.
And we thank you.
Mhm.
That was very helpful.
Thank you, guys. Have a wonderful evening, and hopefully we'll see some of you on Saturday.
Yeah.
Thank you.
Bye-bye.
Bye.
God, come on. get out of here. There we go.